All right, let's get introduced to some service organization control reports, better known as SOC reports. And this is all about outsourcing. When the concept of outsourcing business services first began, companies used only who they already knew, like ADP for their payroll, or ComputerShare to do their shareholder services. And you didn't outsource that many services back then. Only recently, businesses have started outsourcing just about every service, whereas things were done in-house before. Now, with the rapid growth of outsourcing, companies need more information about the service bureaus that they're considering using. So there's a new engagement for CPA firms because the AI CPA recognized the need for instilling confidence in these outsourcing services and these service centers. So there's an attestation engagement called a SOC report designed to provide assurance. And as a result of SOC reports, service organizations have the ability to get a CPA firm to perform an engagement on their controls and issue a report, which they could then issue to their clients to instill confidence in their controls. These SOC reports are so common today that if you're a service bureau and you don't have a SOC report, potential trading partners won't even deal with you. Or they would have to come to your business and perform audit procedures or tests of controls right at your place of business. All right, let's start with SOC 1. SOC 1 is for service companies whose product rolls up into their customers' financial statements. So let's say your company is used to doing payroll in-house, but you're considering outsourcing it to this company known as Dig Payroll. Well, by outsourcing payroll to Dig, Dig's payroll product is going to determine the final gross payroll for your company. And the tax liabilities are going to be determined by Dig Payroll. Not just for your company, but for every customer that Dig has. So every customer's financial statements would have Dig Payroll's fingerprints all over it. So SOC 1 is for service companies like Dig whose product rolls up into their customers' financial statements. Dig would want to have a SOC 1 report. So SOC 1 reports focus on service entity controls related to their customers' financial reporting. Best suited for organizations such as Dig that must instill confidence in their controls and safeguards over their payroll customers' financial data. Dig Payroll provides services that can materially affect their clients' financial data, the financial statements. Because if Dig controls fail, their client's payroll will not only be wrong, but difficult to fix. So Dig Payroll's clients will use Dig's SOC 1 report to perform an audit of their financial statements. So if your company was using Dig to do payroll, part of your company's annual audit would include Dig's SOC 1 report. Otherwise, when your company gets audited, your auditors would have to go to Dig Payroll and perform test of controls and audit procedures right there on the spot in order for your auditors to determine whether your company's payroll is presented fairly, because Dig has their fingerprints all over it. All right, now in a SOC 1 report, there's a SOC 1 Type 1 report, and there's a SOC 1 Type 2. So we're about to break SOC 1 up into Type 1 and Type 2. A SOC 1 Type 1 report addresses the suitability of Dig's control design and implementation at a specific point in time. And this would often be done the first time that Dig requests a SOC 1 report. So maybe Dig Payroll is not a huge company. They don't get audited every year. But in order to have clients, customers who trust them, they've got to go out and get a SOC 1 report, let's say for the very first time. If that's the case, they'll probably get a Type 1 report first. And this way they can get one quickly, because the Type 1 report would only address the design and implementation of the controls at a specific point in time. Not over a period of time, but at a specific point in time. Because if we had to wait to get a report that covers a period of time, That would take a lot longer. So a SOC 1 Type 1 report addresses the suitability of control design and implementation at a specific point in time. The SOC 1 audit firm will provide an opinion regarding whether the description of DIG's controls is fairly presented and if DIG's controls are effectively designed and implemented at a specific point in time. What's missing from a SOC 1 report is an opinion on control effectiveness. There's no opinion given on control effectiveness in a SOC 1 report Type 1. A SOC 1 Type 1 report will go as far as to give an opinion on whether the controls are effectively designed and implemented at a specific point in time. Not over a period of time, but at a specific point in time. Okay, now we're going to make the transition from a SOC 1 Type 1 report to a SOC 1 Type 2 report. We're still talking SOC 1, but we're going from Type 1 to Type 2. Okay, when we go to Type 2, now we're going to concentrate on DIG payroll's control design and operating effectiveness over a period of time rather than just at one point in time. So we're moving from design and implementation at a point in time to design and implementation and operating effectiveness over a period of time when we go from a SOC 1 Type 1 to a SOC 1 Type 2. Because the Type 2 report is going to contain a description of the tests performed. And let's face it, if we're going to give an opinion on operating effectiveness, we've got to be able to test these controls. So our report's going to give a description of the tests performed and the results of those tests. And this Type 2 report will give an all-important opinion on whether DIG's controls are effectively operating over a specified period. So the two biggest differences in the Type 1 and the Type 2, in the Type 2 report, the audit firm examines the control environment over a period of time and gives an opinion on operating effectiveness. Let's try this question. A typical SOC 1 Type 1 report includes a description of which of the following? 1. The tests performed by the auditor on the service organization's controls. In a Type 1 report, no, there's no tests performed. The tests will be performed in a Type 2 report. Roman numeral 2, the results of the tests performed, no. So if we're not going to perform any tests, there won't be any results of the tests. So we're going to go with D here. Neither 1 nor 2 would result in a Type 1 report. So a SOC 1 Type 1 wouldn't have either of these. A SOC 1 Type 2 would have both. So let's go with D here because a SOC 1 Type 1 report does not include tests of controls, but instead includes a report based on the suitability of control design and implementation at a specific point in time. All right, a SOC 1 Type 1 report includes a description of the entity's system and the auditor's opinion regarding 1. If the description of controls is fairly presented. Yes. 2. If controls are effectively designed. Yes. In a SOC 1 Type 1 report, that's going to address the suitability of control design and implementation at a specific point in time. So both of these are correct. Description of the system, auditor's opinion regarding if the description of controls is fairly presented, if controls are effectively designed. Notice they didn't say anything about operating effectiveness. So we could say both of these are correct and go with letter C. All right, which of the following SOC 1 reports would a CPA audit firm examine a service organization's control environment over a period of time? Well, that would have to be SOC 1 Type what? That would have to be Type 2. If you want an opinion over a period of time, that's going to be a Type 2 report. Letter B.